Prepare reports for decision-making. Purpose and characteristics of management reports. Reports for decision-making transform raw accounting data into actionable insights for planning, control, and performance evaluation. They provide managers with relevant, timely, and understandable information tailored to their level of responsibility. Effective management reports align with the objectives of each responsibility center, highlighting controllable variables while excluding irrelevant data. CIMA's reporting principles emphasize clarity, conciseness, and comparability to support rational decision-making. Reports must distinguish between financial and non-financial indicators, short-term results, and long-term trends. The ultimate goal is to facilitate informed decisions that enhance efficiency, profitability, and goal congruence across the organization. Classification of costs, revenues, and control focus. Accurate reporting depends on differentiating controllable and uncontrollable elements. Controllable costs, such as direct labor or department-specific materials, should form the basis for evaluating managerial performance. Uncontrollable items like central overhead allocations must be reported separately to avoid unfair accountability. Similarly, reports should highlight cost variability, fixed, variable, and stepped costs, to help forecast the financial impact of volume changes. Attributable costs and revenues, directly traceable to specific centers or products, provide the most reliable basis for divisional performance assessment. Separating these components allows reports to identify genuine efficiency improvements and reveal areas requiring corrective action without distorting managerial performance. Performance measures and interpretative analysis. Quantitative reports typically include budget versus actual analysis, variance breakdowns, and profitability statements by product, customer, or division. Performance indicators such as ROI, RI, contribution margin, and sales growth rate provide financial insight, while balanced scorecard metrics add customer, process, and learning perspectives. Effective interpretation transforms these figures into managerial insight. Trend analysis, benchmarking, and ratio comparison reveal whether results stem from operational improvement or external factors. Reports must also include narrative explanations to contextualize data. Without interpretation, quantitative measures risk misdirection. CIMA therefore promotes management commentary that links outcomes to strategic intent and identifies future opportunities or risks. Role of data analytics and business intelligence systems. Modern decision-making reports increasingly rely on business intelligence (BI) systems that integrate data from finance, operations, and market sources. Advanced analytics, including predictive modeling and dashboard visualization, enhance responsiveness and accuracy. BI systems enable drill-down analysis, from group results to individual cost drivers, allowing managers to trace root causes of performance variance. The 3 V's of big data, volume, velocity, and variety, expand the range of inputs available for decision-making. However, governance controls are essential to ensure data integrity and relevance. Properly applied, data analytics transforms static reporting into a dynamic, continuous feedback process that supports agile management and strategic foresight. Behavioral and ethical considerations. Decision-making reports influence managerial behavior, incentives, and organizational culture. Poorly designed reports can encourage dysfunctional actions, such as budget gaming or short-term cost-cutting, that undermine long-term value. Therefore, CIMA highlights the ethical dimension of management reporting. Transparency, fairness, and accuracy are vital. Reports should promote goal congruence rather than internal rivalry. For example, divisional performance summaries must disclose the impact of transfer pricing or corporate cost allocations to maintain trust. Encouraging participation in the reporting process fosters ownership and accountability among managers, aligning individual incentives with organizational performance objectives. Integrating reports into strategic decision-making. Reports for decision-making must link operational results with strategic objectives. Executive dashboards consolidate key metrics, financial returns, efficiency ratios, and customer outcomes, into concise visual formats that support timely strategic choices. At tactical levels, variance and cost-volume profit reports guide resource allocation and performance improvement initiatives. Scenario modeling and sensitivity analysis within reports help decision-makers anticipate future outcomes under uncertainty. The integration of financial reporting with non-financial metrics, sustainability, innovation, and employee engagement ensures a comprehensive view of organizational health. Ultimately, effective reporting transforms management accounting from a compliance function into a strategic partner, enabling data-driven decision-making that sustains competitive advantage.